What is up, ladies and gentlemen? It's your boy Kane Ruiz back with another Gucci Mane video. Now, before we get into it, guys, you already know what we have to do. You already know. Hit that like button for that YouTube algorithm. Hit that subscribe button if you guys haven't already, and hit that Taco Bell notification so you guys can know when I come out with a new video. And sometimes that's important because sometimes my stuff is time sensitive. So please hit that Taco Bell notification. Live Moss. Let's get it. Now, today, guys, we're going to be talking about GameStop. We'll be talking about Robinhood. We'll be talking about Wall Street bets. We'll be talking about all that Gucci stuff that you guys probably don't know about. So, but, hold on. Before we get into that, ladies and gentlemen, let's talk about stocks. Let's talk about Robinhood. There's a link down below, guys, in the description. If you guys would like to sign up with Robinhood, link your bank account. You get a free stock, I get a free stock. Help each other out. Let's grow. And then, if you guys don't want to mess with Robinhood no more, which I understand why, there's Webull. You can deposit $100, you get 3 free stocks. But besides that, let's get into it. Let's talk about GameStop. So GameStop, I'm gonna try to make this short and simple. The reason why GameStop shot up so much is because hedge funds, which are big billion-dollar people that manage billions of dollars, basically probably more than likely your retirement fund or certain stocks. So basically, these big corporations that have billions and billions of dollars decided to come out here and short 140% of GameStop. And their contract was going to be up in, I think, X amount of number of days. I still think they have certain amount of contracts left with GameStop. So hedge funds, they came out, they shorted 140% of GameStop. Retail investors saw, so retail investors, aka people that are on Wall Street bets, people like me and you, people that are watching this video, we are retail investors because we don't go with the big hedge fund. We don't do this. We do our own stuff. They saw Wall Street bets basically saw that GameStop was being shorted 140%. They all came together. They all say, let's buy the stock. They all bought the stock and it rose in price. Not really shocking. As more people buy the share, as more the price grew on GameStop, right? But not only that, but because it was being shorted 140%, it got a boost. Because now these hedge funds had to start paying out. Yep, they had to start paying out money to keep the contract. So you have to pay a premium to get these options traded, right? Right. So when Wall Street bets, they came out here and bought all the stocks. Now their premium started to become higher and higher. So basically I heard every $7 GameStop went up is how much is equals to amount of $1 billion of how much the hedge fund lost. So it shot up probably, I don't know, a lot. It shot up a lot. A lot of $7. So every $7, the stock price equals $1 billion, which equals to how much higher premiums that these hedge funds, which liquidates a negative net for the hedge funds for this options towards GameStop. And hedge funds, they've been doing this for decades, guys. They've been doing this for years. It's nothing new. It's nothing new. They all hop on one train. They all get together and say, let's just short GameStop. And they did. And they lost after round game. And I think it's funny. King, what side are you on? I'm on Wall Street bets. I'm a retail investor. And these people don't give us enough credit of how good we can invest. And it makes me mad because all these people are out here protecting the rich. I'm not saying us people, but I'm talking about, people like on the news and stuff, and people on this and that. They're like, oh, these people don't know what they're doing. We know there is no advantage that these hedge funds have that has over a retail investor. There is no advantage that these hedge funds have over retail investors. They might have high-ranking relationships with certain type of people, but that doesn't give them a bigger edge. Stocks come down with fundamentals, speculative, economic moats, and stewardship. That's what all comes down to, is a balance sheet. And what numbers are you guys producing? So, why did GameStop get shorted 140%? Because GameStop fundamentally, for an analysis, for a growth investor, for a dividend investor, it wasn't really that pleasing. They had a cash, yes, but GameStop is kind of like a dying business. It's kind of like a Blockbuster. It's kind of like a family video. It's just like, you guys are not needed anymore. We have subscriptions. Like, GameStop's not needed anymore. We can buy games literally on our Xbox. So, that's why I never did invest in GameStop. So that's for the reason why these big hedge funds wanted to short it. Now, what's a short position, if you guys are new? A short position is betting the stock's going to go down. So they had they shorted more. These hedge funds shorted more than there were more shares available. They shorted 100%, 140%, like what I said. Wall Street Bets, they saw that, they grabbed that, they said, let's all go buy a GameStop. Price rose. Melvin Capital, I think they lost 30% of their total assets in a week. It don't matter because they get bailed. All these hedge funds, primarily, they get bailed out, guys. They get bailed out no matter what. They can lose $1 billion, and another hedge fund will give them $1 billion. Like, it's all right, bud. We got you. It's okay. You know what I mean? So why are the rich mad? King, what are you talking about? What are you talking about, the rich mad? Well, let's hop into this video right here.
Stock is doing what it's doing is people are sitting at home getting the checks from the government, okay? And this fair share is a bullshit concept. It's just a way of attacking wealthy people, and I think it's inappropriate. We all got to work together and pull together.
So after seeing that mean old guy yelling at everybody, he's like, everybody's getting their stimulus checks and they're just putting in the stock market, and you guys are, stealing money. You hedge funds have been stealing money from people from a while. And that's what I've been seeing a lot on the news and stuff, and it's like, okay, where is the support from people that have money, that are investors, to back the little guy up? Because all I'm seeing is these big people tell him, you guys don't know what you guys are doing with your money. So I was on YouTube last night, and I like Chamath. I love the dude. And Chamath video popped up, and he did an interview with CNBC. I said, okay, let's watch it. And you guys are about to watch it with me too. So here's CNBC, the video with Chamath.
Retail phenomenon is here to stay. There are 2.7 million people inside of Wall Street Bets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist in the world? To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years. And that game came undone.
Well, I mean, that may be somewhat of an extreme example. Let me just go through a couple of things you said here. I have a hard time believing. I mean, you suggested that there's a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things.
There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds.
Now, if you guys don't know who Chamath is a capital venture investor. He has a bunch of SPAC companies, which are blank check companies that do mergers with other companies because they don't want to do the traditional IPO. Well, Chamath, he's looking into taking one of his blank check companies named IPOE with SoFi. If you guys don't know what SoFi is, we'll be doing a video on SoFi next. But what does Chamath really say? Chamath, he comes up here and he backs us up. He said, hedge funds have been doing this for years. There's nothing new. I'm glad the little man won and stick it right back to him. And he's like, retail investors don't get the credit that they deserve. And we don't. He said, I can go into a hedge fund and take their fundamental analysis, and I can go into a retail investor and take their fundamental analysis, and you're gonna have a hard time telling the difference between which is which. And that's primarily true. Not saying that all retail investors are smart. No, that's not true. But what he's saying is, you guys need to start giving credit to retail investors. You guys need to start giving credit to, there are certain things that hedge funds can't do anymore because now us people are educated, us retail investors are educated, and we can go out there and we see you short another GameStop 140%, you better believe people, retail investors like myself and other retail investors, we're going to come out there, we're going to buy all that stock, and it's going to rise up, and we're going to liquidate that 30% of your guys' assets again. Just so you guys know, don't play. We don't play. And that's what Wall Street Bets did. We don't play. Chamath comes up, he backs us up. He backs the retail investor up. And I love it when Chamath said, to that guy, he's like, the guy's like, I'm happy these people are getting rich. I'm happy these people are making money. Chamath, he's like, no, you're not. No, you're not. And the lady you had on before here, she wasn't either. So if you guys want to watch that video, just type it in Chamath, CNBC, and watch the full video on that. But that was just a little recap. I thought it was a good video to put in this video because Chamath is a legend and he literally helped backing up the retail investor. So I really appreciate that guy. Shout out to him. Shout out to Chamath. But getting into that, that's really all of the news with GameStop and the reason, and these rich people getting mad at us, and that there are some people out there like Chamath and a few others that I've seen have backed us up on the news. I saw another guy on Fox, I forget his name, but he was backing up the retail investors. So I like seeing these people that are capital ventures, investors, or just big investors overall, backing up the retail investors. So I love seeing that. So obviously, here's another thing. Here's one big question. Should we still be using Robinhood King? And I'm going to give you guys that answer right now. So if you guys didn't know what happened already, Robinhood and other countless brokerages stopped us from buying GameStop, AMC, costs, different type of stocks that we saw that hedge funds were shorting. And so what that happened is, we look at it, and what they were saying is, due to extreme volatility, you guys can only buy limit orders or only come out with closing positions. And it's like, so limit orders is, you can only buy one share or how many ever shares the brokerage says you're allowed to buy. That's a limit order. The next thing too is they said, only closing positions, you can come out with GameStop and AMC and all these stocks. So now you can't buy them anymore, they're only closed. So Kane, is Robinhood protecting the rich? Is Robinhood protecting the rich? So I'm gonna get into that, guys, right now. Robinhood has bad communication with his investors. Do I think they're protecting the rich? Probably. I say probably 40% they're protecting the rich, and I say 60% is what's the problem. This is the problem. In stocks, when you buy or sell a stock, it's not instant. It's not, although it may seem instant to us investors, our money goes to a clearinghouse. And these clearinghouses, I'll show you, this is what a clearinghouse is. And these clearinghouses, right, have that specific job to do. Well, these clearinghouses that were linked with, Robinhood and these other brokerages, they didn't have enough money to pay off as much money as people were making off GameStop. So let's say people were making billions of dollars on GameStop in total, right? In total. These clearinghouses didn't have enough money to be paying out billions. So if the clearinghouses don't have enough money to be paying out in billions, then it goes back to the brokerage. Okay, the brokerage, you guys have to start paying money to take care of these things. The brokerage is like, hey, we don't have billions of dollars either. So guess what? They had to go out there, they had to limit close only positions, and for that reason, that happened. So it's really not in a sense it is Robinhood's fault, but in another sense too, it's not entirely their fault. So it's like 40% your fault, 60% not. You know what I mean? 40% trying to protect the rich and you guys are being sleazy. 60% if you guys know about security exchanges and all that stuff and the clearinghouses and stuff, then you guys should know what I'm talking about. But if not, it's okay, guys. Don't really worry about it because it's just a lot of information to get into. So will I still be using Robinhood? I honestly don't know if I'll still be using Robinhood. More than likely, I probably will. But in the future, if they can't fix this problem with, clearinghouses and stuff, and they can't fix this problem with, we're not dumb anymore, the retail investor's not dumb anymore, we got you guys, we know what you hedge funds are doing, but, Robinhood's gonna come out here and try to protect them, then I don't know about that, boss. So, with me, I don't know what I'm gonna do. I honestly don't know if I'm gonna stay in Robinhood, if I wanna change, but the majority of these brokerages have the same problem. So I'm just gonna stick it out. I'm gonna see what's happening, and I'm gonna try other brokerages. I'm gonna try other different things. I'm also trying Chamath's SoFi that he's gonna take public. But guys, with that being said, that's really what happened. So you guys need the rundown of why GameStop shot up. You guys know what Wall Street Bets, why Wall Street Bets made history, why the little guy won. You guys know why are the rich are mad. You guys know what did Chamath say? What did these big billionaires do to back up the small investors? You guys know that. And you guys know if you guys should still be using Robinhood. I honestly don't know. It's you guys' opinion. If you guys want to use Robinhood, you guys still can. I probably more than likely will, but I really don't know, guys. I'm going to try other brokerages and see how I like them. But if I can't find any of them that I like, I will still be using Robinhood. Will I invest in Robinhood if their IPO comes out in 2021? That's the rumors. Honestly, I don't know. And it depends how much their stock price is. I might invest in Robinhood. I don't know. But I'm not saying I love Robinhood. I'm actually pissed off about it, but I also know it's entirely not their fault. So I'm not gonna be like, F Robinhood. But so guys, that's the video. I love you guys. Have a Gucci day. Be sure to watch the next video because we're gonna be releasing another type of brokerage, SoFi. So let's see if you guys want to see what's up with SoFi and how easy and fun it is to use. We'll let you guys know. But with that being said, guys, I love you guys. Have a blessed day. Peace.